Welcome back to the channel, everybody. I'm glad you can be here today. We're going to do something exciting. It's brand new. We're going to talk about Hive Investments. Really excited to talk about this one. I guess you could say that Twitter is abuzz with discussions. That was a terrible joke. Okay, so we're going to get into everything we can. This could be a long video. I'm going to try to keep it short, but you hear that noise? What? Oh. All right, guys, let's jump right into this. I don't want this to be super long because I don't know if you'll watch the video if I make it super long, but what I'm going to start is let's do a preface. I'm investing in Thor Financial, so I'm newer to DeFi. I am super excited about Hive Investments. They're planning their upfront venue here, the way that they're meshing with the community. There's more, but all those things are making them very attractive as an investment and also great as a group of people to work with or be a part of in a community. That's just being upfront. I can't wait to be involved with this. So let's jump in. You guys should go read these Medium articles. I will try to put a link just to Hive Investments on Medium down in the description. There's a lot of information here. We can't cover it all, but I think you guys need to check it out and learn everything you can about Hive Investments and what makes them different from all those other node projects. Not all of them are bad. I'm in Thor, like I said, but all the ones that have crashed and burned, you're going to quickly see what's different here. The first Medium article just detailed out their infrastructure. So all the people that are involved at Hive Investments. So let's drop down here. You can see all their names. A lot of them actually have Discord names, and you guys could contact them in Discord if you had further questions. That'd be pretty awesome, right? Be able to talk straight to them. So here's their structure. Of course, have a CEO, a CIO, etc. You can see some of these have vacancies. They may not now, but they did when they released this back in December. So you can come in here and take a look at that investment team. And that's kind of where this article drops off. So this was their first article, just to give you a brief introduction to who the team is. But number two is where it took off for me whenever I saw this. So Daas 2.0 is what they're introducing in this article as to what the type of Daas they're going to be. DeFi as a service, by the way. I'd say I'm going to not spend too long, like I said, but I'd say the core item in this article, we're going to scroll down right here. Transparency, reliability, and sustainability, guys. Those are the three key tenets. What happens with other DeFi projects that you've been in, specifically nodes? They start up, they're good, they pay ridiculous emission fees. Everybody's happy, you're getting paid. You make a lot of money off of them if you got in super early, and then they die. Not all of them. But anyways, transparency is huge for this group. Transparency is something that I know you guys want with the teams that you invest in. So that's one of their main foundations. They want to be transparent with everybody in the community with, investments they're making, what they're going to do, how they're going to do it. Reliability goes hand in hand with that. Doesn't really matter if you are transparent if you're not reliable, right? They want to be reliable with these guys they want to be reliable with the community, with us, because I'm a community person. I'm not sponsored by them or anything like that. I'm just doing this video because I am super interested in this project. Great atmosphere on Twitter, and the community already is taken off, and they don't even have a Discord. It's just all tweets. Lastly, sustainability, possibly in some ways the most important thing in the end, because the rest of it can't happen. They all go hand in hand. They definitely are a mesh, but got to be sustainable to continue to run. And I think that is going to be key for people to get invested as well. I think this is, by the way, the second Medium article. They have 5 Medium articles and then another follow-up Q&A article. So they have got tons of information on this already, and they haven't even launched. This is almost like a white paper before the white paper. So got to be sustainable. They're doing their best work ahead of time to make sure that they are sustainable and not relying on Ponzi-nomics. Don't like the word, but that's the truth. All right, so moving on. They discuss initial launch functionality. I'm going to let you guys come in here and see this, but specifics here, they're going to work on the balance in bear and bull markets. So in a bear market, these guys have what they call a safe Hive policy where they can actually cut rewards by 50%. This may not be 100% where things are going to be, but they're giving an example, and that's awesome. I know it doesn't sound good to people, but if you sustain the project by cutting rewards during bad times and you come out on top, I'm all for this. And the reverse of that in a bull market. Okay, so we have a great bull market. Everybody's happy. We're all making money. These guys are going to try to do buybacks to help increase the price, or they'll airdrop. Maybe there's some other stuff they do. So they're trying to balance this out. I think this is going to be awesome. Security is always going to be a foundational layer for you guys getting invested and for anybody else to feel good about the project they're in. Key thing here, hacking, scamming, rug pulls. I know there's people watching this that are familiar with that. You don't want to jump in and get a rug pull. You don't want to find out that the system got hacked. So they're building their infrastructure from the ground up, by the way. This is not a fork. So that's not going to be a factor here. KYC, first and foremost, they're going to have multi-sig, which means the team, it's not one person that can make a transaction. It's a team effort to do a transaction. So I think all of this is going to be huge to instill trust in the community. Everybody does want KYCs, doxing, and all that. KYC, first and foremost for me, I would say. So they are going to do an audit as well. That'll come for the contract before it gets released. Is what I've seen. They're going to have the white paper. Like I said, this is almost like a white paper as we go forward, but they're going to have that as well. Number 3, this is about governance. I'm not going to go into all these definitions. Come in here and check this out. So they have a DAO style approach for the governance. The queen is basically the core team. So as we move down, they're going to obviously have voting. That's how the DAO is going to work. So if you hold a certain number of NFTs or a certain number of honey tokens, that increases your vote count, essentially. This is not unusual. This is pretty normal for these. And of course, people that are part of the governance can make proposals. And those proposals can be voted on and accepted. Number of different things, ideas that people come up with that they want to vote on with the project and changes that they want to introduce that might be good ideas to make to the project. So the governance goals, they talk about what their goals are here. Of course, creativity from the community is one of the items that they mention. Education in the community, so people know more about DeFi, their investments, better all around for them when they make proposals to this project as a result of the education. And so aligning all this stuff, basically it all centers around community involvement. I'll say that. So they kind of go through here. I'm not going to hit all these, but the weighted voting system I mentioned, they have investment reports, which means same thing. I'm in Thor, and so I want to see what the team's invested in for the project, and so that's awesome. They'll give us those details. It goes back to the transparency. So investment proposal submission. So that goes back to the team and me, the community. We make proposals to submit to be voted on. So the contribution bounty system, I think this is already happening. They have rewards for people that want to contribute to this project. You know, making UI related things, website design, some beautiful infographics that I'm fixing to swap to. So awesome. They want the community to contribute and be a part of this, and they want to reward the community as well. So the Queen Say is the only thing in here that I'll hit on. We'll scroll down. I don't know if I highlight anything, so I might not do any good. I didn't. So they give a good example of how there is a proposal. The team said, what do you guys want to do? Here's a vote. Do you want to pick Phantom for this project, or do you want to pick Polygon? Well, Phantom won, but what happened was the Queen, and I say the Queen, it's the team. They said, so this is not going to work, and here's why. So that's the Queen's say. The Queen can overrule some decisions in certain situations when they think it's going to be a detriment to the project. Shouldn't be an issue. This is all about transparency, right? I question this a little bit, but I get it. You know, I'm not an expert. If I vote on this, but someone else is an expert, there's going to be times where the expert maybe knows better, and I need to just be educated on it. If it changes my vote, no big deal to me. So I guess the point is, the rest of this article, come take a look. They talk about everything, pros, cons for those blockchains and why they wanted to swap to Polygon instead and not take Phantom. Good detailed data. So they do a good job of explaining. So they don't just say, no, we're not going to do that and walk off. Still, upfront communication, even though they basically vetoed the vote. The next to last article, they're giving back to the community, guys. So this is centered around beehives, right? Good theme. Well, they want to give back to the community because the bee population, there's numbers out there that show that it's declining and not doing well. And so they're going to actually give back 1.5% of NFT sales to put back into real beehives and bee conservation through different various means. Come take a look at this, though. Awesome philanthropy situation here with these guys. It's just great to give back to anything with what you are successful from. All right, tokenomics. I don't want us to go through all of this. Come take a look at this. But instead of me using the tokenomics article, I'm going to swap to this beautiful infographic that Mel.hive on Twitter created. And they told me I could use this and showed this in the video. Very appreciative of them allowing me to do this because this is really well done. I'm going to put their name down, their Twitter name down. If you guys want to follow them, give them a like. Let's hit this up. Hivenomics 1. So there's 3 of these infographics, maybe more to come. They're still creating them. So first off, there are tiers of NFTs. There's 40,000, by the way. We're getting down here to it, but you'll see that breakout here. 98% of those NFTs are going to be worker bees. They emit 0.5% daily. So zero point 0.05, honey a day. It doesn't sound like a lot. The whole point of this is get this in the mindset when you see this and you come from Strong or another huge node project. This is all about sustainability. And the NFT is tradable. So you haven't locked your investment. So 98% are the lower emission rate or different type of NFT. Then the next step is 1.5% of those NFTs are guardians. So pretty small, but they are double the yield of the worker at 0.1 honey. The queen is the last, doubling to 0.2 honey. Only 0.5%. So 0.5% of those are going to be queens. I'd love to get that, but those odds are not in our favor, guys. So there's the NFT minting. So right now the price of honey, they're pegged to be about $100. So one honey is 100. So it's going to cost you about $1,000. And that's before prices change. People come in and that's going to be to mint the first 8,000. They're going to increase that by another $50 for the next 8,000. And it increases from there for each set of 8,000 till they hit 40, and then there's no more to mint. They kind of mentioned they don't want to price people out, but you can't get everybody in. It's never going to work that way. Now, that doesn't mean they don't have some stuff in the future, some other changes. They talked to this in the Q&A a little bit. You get your chance and get in, though. When that launches, I think these are going to go quickly. So we kind of hit this. Why trust this group, Hive Investments? Well, we talked to this transparency, reliability, and sustainability. The amount of work they put into this already is ridiculous. And I don't mean the infographic. I mean all the information this infographic was created from. Go take a look at them again. They have done a lot of work, guys. And there's more to be done before they even release. We talked about the KYC and Docs team, the multi-sig wallets, and the pre-launch audits. These are great things that this team is pushing and what their goals as a community or with the community are. Let's get down to Hivenomics. Let's get down to Hivenomics 2. All right, so this talks about the token allocation. There's 1 million of the honey tokens. And again, that launch price is going to be $100. Now, we're going to get to it in a second, maybe on the Q&A. I may let you guys do that. I don't want to go through that too much because it's a lot. But essentially, they have a treasury wallet at 44%, and that's part of the multi-sig. So not one person does the transaction. Many people in the team have to do that to actually approve the transaction. And then you've got the other 44% there that's in the rewards pool wallet, and that's for sustainability for the runway in the beginning to sustain from the very get-go. So you've got 10% for the team wallet, and it's time locked. Some of it. They have an initial release that they'll have, but it unlocks over time, and we're going to see that in a minute. Now, probably the key thing here, this liquidity pool is going to help with price volatility throughout from the beginning on to help get some people in that wouldn't be able to get in if, from that first launch minute where the price, like you normally see with all these node projects, it goes straight up. And they even say it here, allowing even the humblest of bees to enter the hive at a reasonable price. I'm not saying there aren't going to be people that are still locked out at the pricing, but you could be locked out even more if the price doubled, tripled, etc. This will help. All right. So again, with the why do we trust? So we talked about the team allocation. Only 25% of that is available in the very beginning. the multi-sig, and the time lock. Hivenomics 3. So I think this is the big sustainability chart that I think makes sense. This is treasury growth versus emissions. Your emissions grow, but you end up being overtaken by, your treasury grows, but you end up being overtaken by emissions. That's these two showing here at the 2% or 1% daily returns, and it shows how they just dive off. And this is a Monte Carlo simulation they ran, so this is a lot of data. But they found out that the 0.5% daily emissions, very, very different on the daily returns and way, way more sustainable. So that's basically what you're seeing here is they're showing that they can actually survive and be sustainable for a long-term period versus maybe dying out in the first 2 months. Excellent stuff there. So it kind of hits up and shows you some of these beautiful bees that they've released. You may have seen them in the beginning, a little scary. And they talk about, again, I mentioned that, well, why an NFT? Thor is moving to this as well in their version 2 contract. You're not going to be a sunk investment with the NFT because you can sell the NFT and get your investment back to someone else, or sell the NFT to someone else to get your investment back. Awesome. So you have a liquid asset and you make a return on it, guys. We will briefly jump, but we're going to skim because, again, there's a lot in this QA or Q&A. And this is just the first one. So community has tons of questions on Twitter, and they answered these questions as fast as they could to the community on the Tokenomics article in particular. All right, so when launch, great start here. So they're estimating mid-March, and approximately 2 weeks before that is the Discord launch. So people keep asking, how do you get whitelisted? I'd love to get whitelisted too. They want you to be unique, creative, and be active. And I'd say the be active is huge. So be on Twitter and engage. Mel, for example, awesome infographics, guys. You saw how nice those looked. Engaged with Mel and requested could I show those and use those, and they obliged me and were more than happy for me to use these in my videos. We talked about this, the price pumps at the beginning and how they're going to control that. The liquidity pool is a major part of that, but they have some additional stuff coming, they say. Excited to see what that's going to be. People kind of asking about, it's silly. I've addressed this already, but people concerned about the lower ROI because of the lower daily reward rate, and that ties into sustainability. But you don't lose your investment because it's an NFT. So easily answerable. Nothing about that's bad. So sales tax is something, guys, that they've mentioned. There is a 15% sales tax. This is the method they went with on selling your honey tokens. Instead of doing a claim tax, that's what they decided. And there's more to it here. Come read this article. I'm kind of paraphrasing and summarizing. They don't want a claim tax. It'll end up getting in the way, partially with the compounding. Thor has seen some of this, how it affected the contract, and it wasn't easy to adapt certain things, but they prefer to do the sales tax to help avoid issues with the NFTs. They're going to announce more information on this. They're not done yet. I'll read these two things because I don't want to not read some of this to you guys or re-emphasize. So their first answer is about why they don't think it takes away from investors when they sell. The sales tax is basically just a swap for a claim tax. I'm going to say that up front. I have claim taxes if I claim, right? Well, firstly, they want you to remember that it helps drive the revenue and benefit the protocol, just like a claim tax does for most of the other ones, or maintenance fees, by the way. The second thing is this offsets sell pressure. So this is also a sustainability factor. People aren't going to sell if they have a claim tax as readily. So it helps push that. That doesn't mean that you aren't going to sell and make some rewards, but it helps avoid everyone selling immediately. All right, next we have what demand will there be for the honey token once all 40K NFTs are minted? So they're basically saying, why would we buy honey tokens if we can't even mint more NFTs? You know what I mean? What would we buy that for if we can't spend it on NFTs? Once all the NFTs are minted, the demand will not just go to zero. The point is, on the NFT marketplace, you will be able to sell your your NFTs for honey tokens. So you may still be buying them on there. People may immediately sell first day, for all I know, just to turn a profit. You know how that works. People do that. They've also talked about the fact that they may have some other utility for honey, possibly for holding it. Maybe they'll have staking pools. They don't talk about all of it, but I'm telling you, there are other avenues to help with that, I think. It's not just going to be only NFTs, and I expect them to release a lot more information on this. I'm excited. This part I'm excited by. This is going to help people that can't get the NFT potentially too, just as a side thought here. All right, so what happens when the 40,000 NFTs get minted very quickly and the mint is over? What mechanisms are in place to prevent whales from buying up everything? Similar thing, just because you can't buy one when the mints are over doesn't mean that they're not going to be available on the NFT marketplace. Still possible you can go buy it. You can only mint a maximum of 5 at once, by the way. So there's opportunity for people to get in, and they're not going to be able to just mint 20 at a time. So that's going to help. And they want both large bees and small bees, basically. Everybody's equal is the way they're viewing it. All right. So they don't have a whale tax. They do discuss that. They don't believe they work. I tend to agree with them. So they can't do anything about wallets, by the way. I think that's a question I've seen in other places. I can have multiple wallets and I can just jump wallets if you tried to stop me on one wallet. So they kind of mentioned that they have no ideas for how to create a mechanism to stop that. So they talk about the maintenance fee. They will have maintenance fees, but they don't expect them to be very much. It'll probably be Matic, but they mention that they believe Honey is going to outperform Matic by quite a bit to where that maintenance fee is going to be very negligible. So they're talking about the price point again. Not everybody's going to be able to get in. There's going to be a lot of demand. So there's going to be people that miss out. That's kind of the point they're making. And there's nothing they can do about that right now with the 40,000 minute NFTs. They understand is what they say. They're going to work on other things. So specifically, it says, "We do hear you. The Queen is working on ideas that we can implement to lower the barrier of entry for our smaller bees. Unfortunately, they will be implemented post-launch." So stuff's coming. It's just not going to be the first thing they do. They do talk about sales tax causing difficulties with being listed on a centralized exchange. So they admit that that's true, but there's a trade-off that they're happy with for the moment because they don't want to penalize compounding the honey again via a claim tax. So there's some relation there to the claim tax versus the sales tax. Minting first come, first serve after the whitelist. So that's a yes. There is a whitelist cap. I don't know what that is. They say they'll detail it in future articles. 15% of the minting proceeds are going to the treasury. Doesn't this mean that there will be a constant 50% sell pressure on the price? No, because only a minimal portion of that allocation will be automatically sold. The rest will be sold off manually, as we outlined in the article. So they are going to have a compounding mechanism, but it is going to be different than like Thor or Strong because there's no claim tax to override. The sales tax fixes that issue, so it's there. They're going to allow it, but it is obvious that you're not just going to be able to take an NFT and compound it into another NFT. It's different, right? So you might be able to buy other NFTs with your honey. Maybe you're going to be able to mint honey, not mint honey. Maybe that's not the right word. You're going to be able to stake your honey, and that technically would allow you to compound potentially. They basically say they're going to have mechanisms. They're going to have to release those later, I think. I don't think they're telling you everything that they're going to do. They kind of talk about this. I don't want to get into this too much, but they talk about team allocation, basically the amount of honey that they're allocated. I'll mention it's a larger team. If you compare to some other teams, they're larger because they want to be sustainable. They want to be a top-notch project. And I don't mean in ways to say we're comparing ourselves to other projects, but if they have more people on the team, they need more team allocation in the end, is what that means, I'd say. They want to be long term. There is some way to look at that. I've read through this. I agree with most of what they say, and they're trying to be transparent here. They need to continue to pay the people if they want them to last. If you're a node project that starts and stops and you're dead in 2 months, it's not going to be comparable to this. If this is a long term and sustainable project, I would suspect that these people are going to be paid differently versus some other node projects that start and end so fast. So come read through these though. A lot of good information here and answers to people's questions. And I'm sure there's more to come since this was the first one. With that, guys, I think we're going to end it here. I hope that you enjoyed the video. I'm sorry that it is a little longer, but this is an exciting project and there's a lot to cover. So I just started late and didn't get in on a video because I'm a new YouTuber and hadn't started making videos. I did other stuff first. So yeah, with that, thanks again. Like and subscribe, please, if you can, to my channel. It would greatly help me, and I'll continue to create other videos that you guys might be interested in. You can always leave some comments for other requests. Yeah, with that, if you would, I got another video to the right. If you could check that out, please. We will see you all next time.